Hello, everyone. I'm Therese Johnson, and this is Fort Worth Metro Living. On today's episode, I'm talking with a local mortgage lender, and we're discussing buyer eligibility for home loans and some of the changes that have occurred in the last couple of weeks. We're also talking about refinancing opportunities that may exist for you. And finally, we're going to discuss some options for those homeowners who feel like down the road they may have a problem meeting their mortgage obligations. We're going to talk about all that and more, and it starts right now. So welcome back, guys. I'm here with R.Ovalles, and he is with Supreme Lending. Ray, thank you so much for coming on and letting me pick your brain about what's going on with mortgages.
Absolutely, no problem. Excited to talk about what's going on.
Awesome. So what is going on with, well, actually, tell us a little bit about yourself first before we get going.
Well, honestly, in the industry for a little over 8 years now. I migrated from Detroit, Michigan, here to Texas, and I've been here for 4 years, the 1st of April. So it's exciting. I love where I am. I love the weather here. I love the people. I love the climate and just everything around it, surrounding that. It's just a fun place to be. A lot of different groups of people to communicate with, and I love it. I'm planning on going back to Michigan other than the visit. So.
Well, awesome. Glad you finally got here. Remember, everyone moves to Texas, right? So we're glad you're
here. Yeah.
Okay, so let's get to it. So what is going on in the world of mortgages right now?
Well, as we all know, what's going on around now, we have the virus that's basically taking over our climate. Everybody's trying to adapt to make things happen as easy as they can. I would say, in the world of mortgage lending, and you can speak for real estate, obviously, things have made some turns, but I would still say we're definitely going to see our way out of this. I don't know how fast it's going to happen. I just know it's going to happen. Texas is a very strong, vibrant state, almost country. And I just know that with real estate being as strong as it is here, we're going to bounce back, and we're going to bounce back a lot quicker. So.
Yeah, I was on another Zoom call yesterday, and they were talking about just some of the projections from the investment banks. And Goldman Sachs was one, Credit Suisse was the other. And they were talking about actually seeing some kind of a recovery, maybe third and fourth quarter. So that's really good news. But they're also saying that we will definitely, we're in the second quarter. So that's probably still going to be suffering from the effects of what's going on with COVID right now. And I know that with real estate for sure that it slowed down a little bit. Now people are still buying and people are still selling, but the volume of sales has definitely gone down just a little bit. Are you seeing the volume of new home loans? Are you seeing new applications? Like, what's the volume like with that?
Well, honestly, as far as applications are concerned, when it comes to purchase volume is a little bit lower. Refinance is actually slightly higher than what it had been in the previous months, probably in the previous years. Because there's so much opportunity there. A lot of people are, taking their time or have been taking their time to get to this point to refinance. Obviously, with the purchasing right now because it's too many unknowns, I guess people kind of feel. So it's just, we got to pace ourselves. But when it comes to applications, our office is flooded. Honestly, it's been busy. It's been picking up. There was a slight slow, and then it kind of just took off. I even mentioned earlier today, when I get done with the Zoom call, I got 3 clients back. So it's exciting, and not refinance, that's purchase as well.
Well, that's good to know, because if people are applying for home loans, then that means they're going to be shopping for homes, and that means that we're going to be selling homes out there. So the sellers who are watching, who might be thinking that, now's not a good time to put your home on the market, you hear what Ray is saying. People are still putting in applications to get home loans. So the market is still going, even though things have changed a little bit. And in fact, I did a video previously, and I'll link it at the bottom, that was kind of talking in general terms about what's going on in the market. But applications clearly are still coming in. Refinances are huge because, good Lord, can the interest rate get any lower? I mean, it's at zero now. And just to clarify too, for maybe some people who are watching, just because the interest rate's at zero, that doesn't necessarily affect the home mortgage rate that they're going to get. Is that right?
Absolutely right. So the way it actually works as an investor side of the bank goes and gets the funds and resources used to borrow. So they're going to borrow the money at 0%, and they're going to lend the money out to the investors who are actually going to buy and sell or whatever it is. And so when it comes to home mortgage, your longer term loans are not as affected as your home equity lines of credit, if you can find some of those right now. Awesome. But just your short term loans are the one, consumer debt, your bills, your credit cards. That's where you'll see those lower rates actually shown a lot more. And it comes a little bit in our field, but not as much.
Yeah, so that's the rate, that 0% that's the rate the Fed charges banks to borrow money to loan on home loans, not necessarily being passed down to us, right?
Right.
Yeah. Okay, so with the fact that people have been out of work now for, I would say, 2-3 weeks, if this thing goes on very much longer, some people are going to be, in some really dire straits, as far as, they're not able to maybe make their full mortgage payment because they lost their job or were furloughed. And even though they might be getting unemployment, it's probably obviously not going to be enough to cover all the bills that they normally would when they had their regular job. So what are some options that are out there? We've been hearing like forbearance, adding to the back of the loan. Tell us a little bit about sort of what are the options for somebody who down the road might be in trouble with the mortgage?
Great question. So what you find is that each lender or servicing company has its own way of handling this crisis. So some are doing the forbearance, some are basically allowing you not to make payment or have late payment shown on credit or whatever the terms are that they express to you. And that could delay, you making payments for 2-3 months, 4 months, depending on how long this occurs. But then what's happening is that 3-4 months could become due. This is all over. And that leaves a person who was already not in the position to pay their mortgage hurt even more to pay 4 times that for the time frame that they were out of, or whatever months, how many months they were not making those payments. And so that's one of the things that is occurring or will occur most likely. Contact your servicer, your bank, your lender, whoever it is, to find out. One of the other things is that we're finding out some companies are pushing those that payments out into the end of the loan, the back of the loan, which ideally may be a really good option, meaning that, instead of you making these 3 months payments being late or not at all, you get to make those 3 months payments on the back end of your loan. Then you asked another question, what can people do?
Yeah.
By ironically just talking about it, they could look into opportunities of refinance. Refinance is actually the best case right now because if you are currently receiving and using your most recent pay stub, lines have relaxed a little bit, you could basically benefit by refinancing, skipping possibly 2 months, which means you don't have 2 months payments as it is. And if things get a little bit more out of hand, obviously, then you just have, but you already have 2 months where you can basically avoid not being late on your mortgage, and that's a plus. Other than that, I mean, you're kind of running low on options. Cash out, you can pay off credit card debt, but those would be the best solutions that I've been running into as far as clients calling me. Unfortunately, I did have one just lose their job, and been able to help in so many ways. And it makes it tougher to do that because if you don't have the funds to do it, we have to get more creative and find maybe a product that will. And those are very scarce.
Sure. And so with the refinances, they have to have some kind of enough equity in the house to be able to cover the cost of that loan, right? Because there's going to be costs associated with them doing that refinance. So really, this is for people who maybe have been in their home for 5 or more years, as opposed to those less than 5. I know the market has been gaining like crazy over the last 5 years, but again, there are costs that are associated with doing a refinance if you don't have enough equity in your property.
That is true. Sometimes it works hand in hand, right? The longer time that you're not property, one, you have more equity because you've made more payments. That's true because now you're paying a little bit principal each month, but obviously the backside of that is the economy is doing better, the property values are increasing, and so on. And so with that comes appraisal value. And what we want to look at is let's not shut it off before we take a look. As a lender, I wouldn't want a client to diagnose their situation, coming to the doctor, deciding, do I go to the doctor or not? No, go to the doctor first. And obviously now things are a little bit different with COVID-19, and people are like, hey, don't come here unless you have these symptoms. And if you have these symptoms, then maybe you come. But kind of call, reach to your local lender, myself, and just see what your opportunity is. Do it yourself, because obviously it may not make a lot of sense to you, but there may be an opportunity there. And I would pass that up by doing it yourself or counting yourself out.
Yeah. So basically, if you're out there and you're thinking about buying, or you were thinking about buying before this all happened, then you're still working. I think that's the key, right? Is that you still have to be working in order to get a home loan, in order to buy a house. I mean, if you've lost your job, you were thinking about it before you lost your job, you're probably going to need to wait a little bit until you get your job back and your money is flowing again. But if you still are working and you've been thinking about either buying new, and I don't mean a new home, I mean becoming a new buyer, or refinancing your house, now really is a great time to go ahead and do that. And you have to put all your paperwork together. What better time than now, when we're all sitting at home, to go dig out those tax returns, right? And your paycheck stubs and whatever else that they're going to need in order to pre-qualify you to get a loan. So just because this is going on, it doesn't mean that you can't go out and get a home mortgage, get with a real estate agent and find the home that you are looking for. So I am going to link Ray's information down in the bottom, so that if really reach out to him or to myself, and there is no obligation here. This is what we do every day. But if you're not sure, why not reach out and ask questions? And we're here to give you some feedback and try to help you get where you're trying to go. So the other question that I had for you, Ray, was I'm actually in the middle of a deal right now where I got an email from the other agent saying that he's on the buyer side, I'm on the seller side, and that the requirements for FHA had changed to some degree, and that the credit score eligibility was changing. So talk a little bit about that, because that's important for someone who's going into it as a new purchase. Absolutely.
And so there was a conversation regarding that prior, right? Like somebody told them, hey, well, you're qualified now, FHA has maybe changed their guidelines, and that's not entirely true. What happened is FHA's guidelines pretty much stayed the same. There were requirements for the investor who was now taking over, putting their money forth, is now requesting let's tighten this up, and for various reasons. Right now, things are a little bit shaky, a little bit, right? We don't know when this is going to be over, and it is over. Hypothetically speaking, who's to say things are going to go back to be the same? But regardless, mortgage rates Everything else is kind of playing a factor into how much you can afford. But then you have to think about, as a buyer, you know, is your credit worthy? And not to say you're disqualifying yourself to, you know, you look at your FICO score on the little app that you use on your phone, and that's qualifying you or not. But you need to find out what the requirements of that lender. And so the lender typically will say, hey, we used to could do 580. Matter
Right.
of fact, we can almost go down to 500. FHA's requirements is 500. But if you look at the facts, you know, that's going to be, that stays in place, and the investor went ahead and changed the guidelines to say, hey, well, now we require 680 or 660.
Right.
Whereas us as a lender, we're a little bit more conservative, but a little bit more liberal, I guess. I don't know how to put it, but we're at 640, and it's like, hey, let's see if we can help as many people as we can, because ownership is important to us, and we want everybody, well, maybe not everybody wants to own a home, but everybody should at least.
Well, everyone who's qualified, I guess, who can afford to do it financially, because we don't want them buying a home and you know, having a home but not being able to enjoy life in any other way because, you know, they've got to make these payments. So what are you seeing time-wise? Like, what's the time frame now? Is it still, can you still get a loan done within 30 to say 45 days? I know with us on my side, you know, with showings being restricted a bit, right? Because sellers don't want a whole bunch of people trooping through their house. And buyers don't want to be going into people's houses either because they don't know them. So all of that is kind of slowing down. Inspections have to be done. Appraisals have to be done, right? I read something about an appraisal was done. The appraiser never went to the house, never went inside the house. So, I mean, there's all sorts of issues around just sort of restricted access, I guess, right now. So what are you seeing time frame wise as far as how is it 45 days? Is it 60 days? I believe FHA was asking for 60 days, I think.
So regarding the time frame of how long it's taking to close the loans, ideally you want to put the 30 to 45 days just because it gives us enough time. And obviously if we do better than that, like we can achieve an earlier close time, let's kind of just play it safe. Regarding our business, our practice is you put the closing date on the contract. Our goal is to meet the closing date. Whatever we got to do, we order our appraisals first day coming out of the gates. Why do we do that? Because if we ideally know that there's going to be a slowdown, which is our normal practice anyways, slowdown, we already got time frame because the builder or the seller doesn't want people in the house or whatever the case is, or is limited, you know, showings or whatnot. You know, that requirement for us to make sure it happens is on us. And so our goal is to meet the closing date. But 30 to 45 days is still realistic. I know FHA and others, maybe VA, may require a little bit more time, ideally, especially VA, because they have a little bit more of a requirement, and probably just as many affected with the virus. So.
Yeah, and I'm seeing it's so funny in some of the Facebook groups that I'm in with a bunch of different realtors from all over the country. People are buying homes sight unseen, left and right, apparently. So again, just to reiterate that this COVID-19 is bad. It is, and we all have to stay inside to some degree based on your location, where you are. But people are definitely buying and selling. And again, I just want to encourage people who are thinking about selling their homes, especially, to go ahead and talk to your real estate agent and take the steps to make that happen. Because right now we do have a buyer pool, right? And if the longer this COVID-19 goes on, the smaller that buyer pool is going to get, because more people are going to maybe start losing their jobs and not be able to qualify for loans. So that's really important. If you're trying to get into the market, go ahead and do it. And there are people who maybe in certain situations where they're like, man, I need to sell this house and I'm worried and I can't get it done. Yeah, you can. And you just need to reach out to a realtor, ask us questions, you know, put them in the comments. We will answer all your questions in there. Even if you're not using us, it's not about that. It's really, if you have a need to get your house sold, then we're going to be here to answer your questions and help you to do that. So Ray, if someone's kind of in trouble like right now, what can they do? Can they call their lender? I know a lot of the times the lenders, they won't even talk to you unless you're like 4 months behind or something, right? Can they try to get a modification, or what can they do right now in your opinion?
Well, I mean, the biggest and the first important thing is sooner the better. Why wait? Why wait until things are worse to try to get the problem solved? If you know that there's going to be a problem or a potential problem that's arising, if you know that people are being laid off in your industry, in your business, if you know that these things are getting ready to happen, why wouldn't a person want to, get ahead of that? And it's just because some people are just like, even myself sometimes, I used to have this mindset of, if I don't go to the mailbox or check my account, that I don't have to make a payment.
Right.
It's still going to be due. So why not just get it done, get it out of the way? Because even though it may seem like a headache, it has most likely a better return than the worst that could happen. And if you wait, and I would rather you try to get it done earlier than wait and have to try to figure it out, scrambling, last minute, foreclosure, whatever the case is.
Yeah. And, at the end of the day, if you have equity in your home and maybe you're not in a position to refinance it, there's always the option to sell it. Now, that is sort of a last resort if you weren't planning on being in the market anyway, but why go through a foreclosure, which will hurt your credit for a long period of time? And you could sell the house, maybe walk away with some money, and then wait to a later time and purchase another home at that point. As far as foreclosures, though, obviously there's going to be some in the future. So that sort of activity, which is way down, especially in our area, is definitely going to start creeping back up. If somebody does have a foreclosure, Ray, how long before they can buy another house?
Depends on the guidelines. Depends on the product that we're going to be using. 3 years is kind of like their idea. Some programs may have 2.
Yeah.
Depending on when it occurred, what was the circumstances of that situation. But what I did want to say too, if you're trying to stave off a problem, right? If you know that this exists and you don't know, like I said, you don't have maybe a ton of equity in the property, you don't have 20%, which is in the back of my mind, I think most people assume, well, I don't have 20% to refinance. I want to get rid of my mortgage insurance. I don't have a ton of equity. Or there may be a way still to refinance, get a lower mortgage insurance, or get rid of your mortgage insurance all in all, do a 30-year and lower your monthly payments. That option is still there. However, most people, shoot themselves in the foot and say, well, I'm just not going to do it right now because I don't think it's possible. And then you get that one appraiser that went out there, did the job right, found the right comps that worked, and it matches your property. And here it is that you have 20% and you're surprised that you were able to do it, but you never tried. And so a lot of people may look at the initial expense of appraising. Well, if your mortgage payment is $1,500, $2,000 a month, you got to pay up $500 to pay off an appraiser to do the loan. Obviously, we have to do that. Chances are you might be able to skip 2 payments. So let's just say you didn't pay that month and then you don't have to pay the next month when we close. Guess what? You got July's payment ready and you haven't missed anything. And
Right.
just hopefully this thing is over with, because they say the sun has something to do with it. And Texas, you get a lot of sun. Hopefully we're able to be there and be in that moment and be able to look back and say, I'm so glad I did that back then, rather than trying to figure it out today when I could just not be making my first payment.
Absolutely. So guys, the message is, if you think you're going to have a problem down the road, get ahead of it now. If you don't know what to do, reach out, because there are people here to help you. And you heard it from the expert over here. So Ray, I want to thank you so much again, just to come and talk to me about it so that viewers can kind of hear from both sides, both from the real estate side and the lending side, kind of what's going on and what's available out there for them. And again, I will put all of Ray's information down in the description below. And so you guys reach out to either myself or him if you have any questions. Put your comments down below too if you have some questions that you want to have answered. We'd be happy to talk to you about that. So Ray, thank you. Have a great rest of your day. And guys, I will see you on the next video.